Hello everyone, welcome back to our channel. This video is going to be about CA Final Self-Paced Online Modules, Set A, Corporate and Economic Class. That too, in Company Law, we are going to see about chapter number 5, Compromise, Arrangement and Amalgamation. So this is the main agenda for this video, and the notes which I am using here, the highlighted PDF of the SU study material, along with the charts wherever I have included it, everything will be available in our website. Now I will show you how to see our website and access the resources. Now we can see that. Now here in the browser you can type Mission CA Virtuals and then you can see the first page which is opened, and here you can click on it. Now here if you see, you will see this tab, CA Final SPOM free resources. When you go into that, you will be able to find all the SPOM resources. Set A, Set B, Set C, Set D, everything will be there. Instead of scrolling through Telegram channel, word messages and all, you can just come here and then find these resources. Just you have to log in into the website, then you can access the resources for free. So all the YouTube channel links, YouTube videos links, and then the resources PDF, everything will be uploaded here. Inside the Set A folder, it will be available. So you can easily come into this website, log in with your mobile number, and then view the PDF resources. So now we can start the chapter. Now we can start the chapter Compromise, Arrangement and Amalgamation. First we can see what is the meaning of these three terms, Compromise, Arrangement and Amalgamation. Then we can go into the sections one by one. So here if you see compromise, compromise means a peaceful or willing settlement of dispute. There is a problem, they are settling that problem by mutual adjustment and concession. They are giving concession or discount. Like if you want to pay 1 lakh rupees and you have to give the goods of 10 kilogram. So 10 kilogram and the price is 1 lakh rupees. Now they are coming to a compromise. I will give you 9 kilogram of goods and you can give me 75,000 rupees. Like that, both the parties, they will give some concession. They will reduce the item. After that, they will come to a mutual agreement. That is a compromise. Arrangement. There will not be any problem, but there will be modification in the rights. So here, the buyer will say, I have the rights to receive the goods. The seller will say, I have the right to receive the payment. In that, some modification will be there. Then amalgamation means, according to the Companies Act, it includes merger and everything will be included in the amalgamation. When two or more companies merge, it will come under amalgamation. When one company purchases another company, that will also come under amalgamation. Like that, amalgamation definition you all know. Now, reconstruction means that is also. It is only one company is involved. We would have learned about the internal reconstruction. So that is the thing covered under the reconstruction. So we have seen the basic terms. Now I will tell you what and all that is there in this chapter. We can add one page here so that it will be comfortable to write. So here, first we are having the compromise. For compromise, the section is section number 230. In compromise, what will happen? There will be a compromise between either the company and the members, between these two people, or there will be a compromise between company and the creditors. So here what they will do? They will conduct a meeting and then they will conduct the voting. First meeting will be conducted, then voting will be conducted. After that, we will go to the tribunal, that is NCLT, and NCLT will give the final order. Before doing the meeting also, you have to give an application to the NCLT. You have to give an application that like this we are going to do a compromise, along with the details of the compromise and then the financial statement, all the things you have to give an application to the tribunal. After that, tribunal will give an order to conduct the meeting. After that, the meeting will be conducted as per the tribunal order. After the conducting of meeting, in that meeting, voting will happen. After voting, we will submit the result to the tribunal. Tribunal will see that whether the specified approval is got in the meeting and they will pass an order. So this is the basic structure of section number 230. And here in the section number 230, there will be people who vote in favor and people who vote against. Now, the people who vote against, they are called as the dissenting shareholder. So, dissenting is nothing but the disassenting. So, when you say the word assenting, it means you are approving it. When you see the word dissent, you are rejecting it. Shareholders who rejected the scheme, this compromise we are telling, right, that will be called as the scheme. People who are rejecting the scheme, they will be called as the dissenting shareholders. Now for them we have to give an exit route. For that we are having one section. So like this we are having various sections in the same manner, and then relating to that we are having one more section, tribunal. Tribunal is giving the final order, right? According to that final order only the compromise will happen. That order the tribunal can supervise. And if needed, the tribunal can make any modification to the order. so that the order we can implement it properly. So that power is also there in the tribunal. This is in another section. So this is related to the compromise. Then when you see we are having the amalgamation. Amalgamation means two or more companies are coming together and then they are forming a new company, or one company is absorbing another company. So amalgamation we are having. For that we are having section number 232. And in this amalgamation we are having similar procedure for voting, meeting, everything similar procedure only. But we are having some additional things. In case of an amalgamation, some additional items should be circulated among the members. You have to give some additional details because you are having a transfer of shares or multiple companies are merging. So some extra information you have to give. And NCLT order also will contain some extra information. Here, one information will be there in the final order in case of a compromise. But when you see the amalgamation, certain other things also should be specified in the order by the tribunal. So that will also be there in the amalgamation. So this is the difference between the compromise section and in the amalgamation section. Only one company is involved. There is a compromise contract between the members or the company and creditors or the company. So these two people are engaged in the particular compromise contract. But when you see the amalgamation, we are having two or more companies. So these extra things also come into play. Now, these two are the normal mode provisions. Second, when you see we are having section number 233, which will tell you about the fast track merger. Like if you want to merge two or more startup companies, you want to merge, or you want to merge two small companies, or you want to merge one holding company and another wholly owned subsidiary. So this also you can do under the fast track merger. So like this, for certain companies loan, we are having a special provision that is the fast track merger. In that merger, you have to get the approval, the required approval you need to get. After that, you can go to the NCLT, you will get the order, everything will happen, but it will happen in a faster mode. Like the name itself is having the fast track merger. It will have a quicker procedure. So here the quicker procedure will be there for these specified companies. They are getting the exemption. Now this is the meaning of the entire sections we are having here. Other than that, we are having sections like cross-border merger. Cross-border merger means one company will be outside India, another company will be in India. Now we are doing the merger. That is called cross-border merger. And merger by the government. Amalgamation by government. Government thinks that these two companies should merge, only then it will be good for the public interest. So in that case, government can pass an order for merger. So that will also be under one section here. And minority shareholder. There is one section for the acquisition of minority shareholder. For example, you are purchasing the shares in the stock market, or another company is purchasing the shares in the stock market. Slowly they are purchasing. Now they got to have the 90 percentage of shares. Now, out of the issued share capital, 90 percentage of shares are held by that particular company only. Now, the remaining 10 percentage they have to compulsorily acquire. For that only, we are having the acquisition of minority shareholder section. When one person or group of person they acquire 90 percentage of the issued share capital by amalgamation or purchasing or any other manner, then they have to give an offer to the minority shareholder that they are purchasing the minority shareholder shares at a price that will be determined by the rules, Companies Act rules. So that also we are having one section. So this is the overview of this entire chapter. Now we can move to the sections one by one. So for this section number 230, I have given you an overview. Now we can see in detail. Now, this is the what we can say a bird's eye view of the section number 230. We saw that it is a compromise. It will happen between company and creditors or company and members. Members means shareholders. Now, application you have to do to the NCLT. We will conduct a meeting. In that meeting, we will do the voting. After that, final NCLT order will come. We have to implement the order. So, when you do an application to the NCLT, we are having certain questions. Who can file the application? First question. Second question, what attachment you have to give along with the application? Like financial statement you have to give, auditor report you have to give, like that. Those documents you have to give it along with the application. That list is another aspect. Third one, when you see third point, when we can file the application. So these three things we have to see in relation to the application that you are filing with the NCLT. When you are conducting a meeting, you have to see the incidental things relating to the meeting. What are all the things? Notice of the meeting. To whom you will send the notice of the meeting. Then what will be there in the notice? Who will be receiving the notice? You have to send the notice to the sectoral regulator also, like RBI, SEBI, Competition Commission, like that, sectoral regulator. For them also you have to send the notice. Advertisement, you have to give the notice. In the advertisement also, you have to give it in the newspaper, because you are doing such a big thing like a compromise and all. Companies are involved, public may be involved, and some people may have some problem in that. So you have to give the advertisement. Then conduct of the meeting, you have to conduct the meeting, conduct the voting, and then you have to get the final NCLT order. In that, whatever the order passed by NCLT, it will be binding. All the people have to mandatorily follow it. What will be there in the order, content of the order? Then you have to file the order with the registrar. In this chapter, whenever you are getting any order, you have to file the certified copy of the order with the registrar of companies. So that is one requirement which will be there in all the sections in this particular chapter. Then appeal by an aggrieved party. If the NCLT order you don't like it, you have to go to an appeal. So that is also we are having. Then in all the amalgamation merger, you have to file a statement. You have to give an auditor report. That is the auditor certification that the accounting treatment is done as per the accounting standard specified under section 133 of the Companies Act. So that schedule 3, everything, it is properly followed. The accounting standard or Ind AS for the amalgamation, everything you followed properly. That we should be certifying using an auditor. So that is the entire overview of this section. Now we can go in detail into the section. Now here if you see section number 230, we are having the compromise here. Who can make an application? The company man can make an application, creditor can make an application, member or liquidator. These people can make an application. So compromise will happen between company and creditors or company and members. Then tribunal will give an order that a meeting should be called, held and conducted. You should conduct the meeting. That is the preliminary order given by the tribunal. So here, what are all the disclosure you have to give? Additionally, what are all the attachment or the extra information that you have to give along with the application that you are making to the tribunal? So all the material facts related to the company, like the latest financial position, auditor report, everything you have to give it. If there is any reduction of share capital, if you are reducing the share capital, that also you have to mention it. Then any scheme of corporate debt restructuring, you are changing the rights or modifying the debt, which is consented by not less than 75% of the secured creditors in value. Secured creditors you will have, right? For example, 100 crore secured creditors you are having. In that 75%, that is 75 crore creditors, they should accept to that corporate debt restructuring. If you are having such a scheme consented by this number of people, then that also you have to submit it. In that you have to give all these extra document also. Creditor responsibility statement. What is the safeguard that you have given for the protection of other secured and unsecured creditors? What are all the measures you have taken so that the other creditors are not affected? Then after doing the debt restructuring, the company will have the proper funds for doing whatever they want to do. For that, the liquidity test, that and all they should satisfy. If they are satisfying that, for that we have to give a report by the auditor. Auditor will give a report that even after the debt restructuring, the company will satisfy the liquidity test. That report should be given by the auditor. Then, if you are following the RBI guidelines for the corporate debt restructuring, you have to give a statement like we are doing the corporate debt restructuring as per the RBI guidelines. This guidelines given by RBI in this date that we are following. That statement you have to give. Valuation report, that also you have to give. So these are all the additional information that you have to attach along with the application that you are giving to the NCLT. Then notice of the meeting, you have to give it to the creditors, members, debenture holders. These three people are very important. Creditors, members, debenture holders. Creditors, members, debenture holders. You have to give it to these people. Then sectoral regulator. For those people also have to give the notice. Like central government, income tax authority, RBI, SEBI, registrar, official liquidator, competition commission. To all these people you have to give them. Any other sectoral regulator who may be affected, for those people also you have to send the notice. The notice of the meeting. In the notice, what will be there? So in notice of the meeting you have to send it. In the notice, what will be there? In the notice, you have to give the details of the compromise or arrangement. What is the details? Then valuation report. After that, you are having the creditor, member, debenture holder. On these people, what will be the effect of the contract or the scheme? How it will affect them? That also you have to give it as a report. The effect of the contract or scheme on the creditor, member, debenture holder. So when you see the member, we are having two types of members: promoter member and then non-promoter member. You have to give the effect on both these people. How it will affect the promoter, how it will affect the non-promoter. Along with that, you have to give that how it will affect the key managerial personnel. That also you have to give. How it will affect the creditor, promoter and non-promoter member, debenture holder, KMP. Then, when you see what is the effect on the material interest of the director. So, for example, you are having a director. That director is a member in a private limited company. Now, if you are doing this compromise, what will be the benefit for that private limited company? Because the director is interested there. What is the effect of the compromise contract or arrangement on the private limited company? If there is any effect, that also you should mention it. So indirectly, they should not do the contract to benefit their own personal interest that they are seeing here. Any other matter also, as per the rule 6, that you have to tell it. So this you have to remember: details of the compromise, valuation report, effect on creditor, member, debenture holder, KMP. Then any change in the material interest, any effect in the material interest, other matter. Then you have to give the advertisement. You have to give it in the website. If it is a listed company, then you have to send the documents to SEBI and then the stock exchange. You have to publish it in the newspaper also. This is the normal provision related to the advertisement. Whenever you are doing any big thing, you have to give the advertisement. Similar provision is there here also. Then this is one more simple point that you can read it by yourself. Then voting we have to conduct. Now in voting, when you see, voting will be conducted through postal ballot. So this is an important point. Postal ballot will be the method that is used to conduct the voting, and from the date on which you receive the notice, if you are shareholder or a debenture holder, the creditor, you are going to vote there. The date on which you receive the notice, from that you are having 1 month. Within that you have to send your vote through postal. Then when you see, if you want to raise any objection, if you want to say that the scheme is wrong, I will not approve it, you have to raise an objection. You are not allowing the scheme, you are rejecting the scheme. Then what you have to do is that you have to have a minimum number of, what we can say, shares or debenture, minimum level of shares or debentures. Only then you can show the objection to the compromise or arrangement. If you are a shareholder, minimum 10% or more of shareholding, 10% shareholding should be there with you if you are raising an objection. If you are a debenture holder, minimum 5% of outstanding debt. Creditor means 5% of outstanding debt. Only if you have this much debt in your hand, you are the owner of this much debt. Only then you can raise the objection. 10% shareholding, 5% outstanding debt. So that voting point done. Then here you are sending the notice to sectoral regulator, right? They should send the representation. If they are having any objection, they are having something to tell, they have to send the reply to the notice that you sent earlier. Now if they do not send any reply, then it will be deemed that they are not having any objection to the scheme. Binding order of the tribunal. After that, after voting, we will see whether the threshold achieved or not. What is the minimum threshold? Majority of persons representing 3/4 in value. When you are seeing the number of persons, it should be majority. When you are seeing the value, 3/4 in value. This much number of people should give approval. Only then the scheme will be approved. Number, majority, value, 3/4 in value. Majority of person, 3/4 in value. Creditor or member, whoever voting, that much should be their approval. Only then the tribunal will pass an order to implement the scheme. The order will be binding on the company, creditors, everything. Then what will be there in the order? In the order, they will have the certain things. These things will be mentioned in the order by the tribunal. If in the compromise you are having one provision, what is the provision? Conversion of preference share into equity share. You are converting preference share into equity share. Then you are having one problem: arrears of dividend. Previous dividend you did not pay, because of that it is now an arrear. Now we are going to settle this in cash or equity share. That you have to decide. That will be there in the order. Then any creditor, what is the protection? After doing the scheme, you will be guaranteeing them or something like that. You will be paying to them. There will be no problem to the debt of the creditor. Like that you have to give something. Some protection should be there. Then if you are varying the shareholder rights, you are changing the rights of the shareholders. So you have to follow section 48. Then if the creditors are agreeing to the scheme, if the creditors are approving the scheme, creditors, they are approving the scheme, then whatever the cases that are pending before BIFR. What is BIFR? Board for Industrial and Financial Reconstruction. Under that particular authority, whatever the case that is pending, that will be stopped, that will be dropped. So if the creditors approve the scheme, then the proceedings will drop. Then other matter also, like exit offer to dissenting shareholders, everything, whatever the tribunal deems necessary, tribunal thinks that it is important to tell this, like that, such other matter also will be included in the order. Now, here in this particular section, they have asked this point in an IBS exam. So, what is this point? The point is you have to get the certificate from the auditor that you are following the accounting treatment as per the accounting standard prescribed in section number 133 of the Companies Act. This certificate should be given by the company's auditor. So, company's auditor will give you certificate, and this is the point that was asked in the IBS exam. So, this is one important point. So, from this section, they have asked this point that I am telling you here. Then, filing of the order of tribunal, you have to file it with the registrar. Then the tribunal may dispense with calling of a creditor meeting. So creditor meeting you have to conduct, right? You can bypass the creditor meeting. You can do the, what we can say, compromise. You can implement the compromise even without conducting the creditor meeting. How? You have to get the consent. You have to get the consent of the creditors in affidavit. How much creditors? 90% in value. Creditors having 90% in value. If you get their approval in an affidavit, then no need to conduct the creditor meeting. The tribunal will give the order even without conducting the creditor meeting. 90% in value of creditors should approve the thing using an affidavit. to the scheme. They will give an what we can say approval to the scheme through affidavit for the compromise. Then, when you see buyback, if you are doing any buyback, it should be following the section 68 also. Just because you are doing under this compromise does not mean that you can violate the condition of section 48. So, section 48 for variation of share rights, and then section 68 for the buyback. You have to follow that particular section also. Then, takeover offer. If there is any takeover offer, you are taking over the company, such a thing is included in the arrangement, then you have to follow the regulations of SEBI if you are a listed company. Then tribunal is giving an order. You are having a problem with that, so you can go for an appeal. And if there is a takeover offer in the compromise or arrangement, there is a takeover offer, and the company is other than listed company, that is an unlisted company, then you can make an application to the tribunal if they are having any problem in the takeover offer. If you are having the problem in the takeover offer in the listed company, you have to follow the SEBI regulation. If there is a problem in the takeover offer of other than listed company, then you can make an application to the tribunal. If you are doing reduction of share capital, then no need to follow section 66. This is one separate point. Here, when you do the reduction of share capital as per section 66, what will happen in that section? You have to pass a special resolution, and then you have to go to the tribunal, get the approval from the tribunal, then you can implement the reduction of share capital. But in this compromise section, when you see, already you are getting the approval of the tribunal in the binding order. So no need to get the approval of tribunal again. Section 66, reduction of share capital. Normally, you will do the special resolution, then go to the tribunal, get its approval, then you will implement the reduction. But here, already you are getting the tribunal approval, so no need to follow section 66 separately if you are doing the reduction of share capital as a part of the compromise or arrangement contract. Now, here, if you want to raise the objection, you should have 5% debt or 10% shareholding. That point again they have given here. So that's all about section number 230. Now the next section I told you, section number 231, the what we can say, the compromise or arrangement which is given an order. Tribunal gives an order for compromise or arrangement under section 230, the section which we saw just now. The tribunal can supervise the implementation. It can do any modification for the plan, that is the contract or the arrangement. Then, if the tribunal is satisfied, tribunal is of the opinion that with or without modification, we cannot implement this plan. This plan is what we can say, it is unimplementable. Then the tribunal will pass an order for winding up of the company. They will pass an order for winding up of the company. When the winding up order will be passed, the tribunal is satisfied that the scheme cannot be implemented and the company is unable to pay its debt as per the scheme. As per the scheme, the debt the company is unable to pay. Company is unable to repay. So then they will pass the winding up order. Then whatever the order made before the commencement of the Companies Act, for that also this will be applicable like that. They have given one subsection. That's all about section number 231. Now we can see section number 235. So here when you see section number 235, it is related to the acquisition of shares of the dissenting shareholder. Now we saw section number 230, right? In that, if there is a transfer of shares and that scheme it is approved by the majority. Majority means 9/10 in value of the shareholders. The shares we are going to transfer. For example, you are going to transfer some shares. That shares, the value of those shares 9/10 in value. The shareholders holding 9/10 in value of the shares that are being transferred. Then those shareholders, if they are giving the approval to the scheme, then you can acquire the dissenting shareholders. Their shares also you can acquire it based on this section. So scheme, it should be approved by 9/10 in value of the shareholders whose shares are being transferred. Within 4 months you have to get the approval of the 9/10 in value shareholders. Then if you get the approval within 4 months, then what will happen? The purchasing company should express the desire to purchase the dissenting shareholders. Dissenting shareholders means the shareholders who rejected the scheme. Their shares also the purchasing company can take over, they can buy. That for that they have to give an offer. That offer, the notice you have to send it to the dissenting shareholders within 2 months. Now, the dissenting shareholders, from the date they receive the notice, from that 1 month they are having, they can make an application to the NCLT, that is the tribunal, and they can stop this acquisition. They are having the 1 month time. If they do not make any application, then what will happen? The purchasing company will have the right and obligation to claim the shares. After the 1 month, they did not make any application, then the purchasing company will have all the rights to acquire the shares of the dissenting shareholders. Shares held by the shareholders who did not give approval to the scheme. Then what will happen? The selling company, they will register the purchasing company as the holder of share. They will execute the transfer. After that, what will happen? The purchasing company will deposit the consideration, the price, the amount. It will be deposited with the selling company. Now the selling company will distribute the amount to the dissenting shareholder within 60 days. Now this is the procedure. Now here we saw that the dissenting shareholder, from the date they receive the notice, they are having 1 month time. Within that time, they can make an application to the tribunal. Now, the tribunal, if they give an order in favor of the dissenting shareholder, that is the purchasing company cannot acquire the shares. If that is the order given, then this will not happen. But if the tribunal gives the order in favor of the purchasing company, like, okay, you can acquire the shares of the dissenting shareholder, then this and all will happen. So if they do not make the application, this will happen. And even if they make application and the order is in favor of the company, purchasing company, then also this will happen. So this is the short flowchart explanation for section number 235. Now here also the same thing is given in section 235, approved by 9/10 in value of the shares. You should get that approval within 4 months. After that, within 2 months, the purchasing company should give should express the desire. It should give the notice to the dissenting shareholder. That information is there. Then if they are not making any application, or they made an application and tribunal gave the order in favor of the purchasing company, then the purchasing company will be entitled and bound. They will have the right and obligation to purchase the shares of the dissenting shareholders. Then dissenting shareholders, if they are making an application and order made in favor of the company, or they did not make any application, then the transfer will be executed by the selling company. They will register the new, that is the purchasing company, as the holder of those shares. Then within 1 month, inform the dissenting shareholders. After the registration of the new company as the holder, then they have to inform the dissenting shareholders also within 1 month that we are having the amount. You can come and claim the consideration. Then that should be distributed to the dissenting shareholders within 60 days. Same thing given here. This is scheme or contract made before the commencement of the act. This you can read it by yourself. It is not that much relevant now. So that's all about this section number 235. Now we can see one more related section to this, section number 238, where you are sending a notice, right? You are sending an offer to the dissenting shareholder. We saw in section 235 that the purchasing company, they will send a notice to the dissenting shareholder that the purchasing company has the desire, is what we can say is desirous to acquire the shares of the dissenting shareholder. They want to acquire the shares of the dissenting shareholder. This notice, we should register it with the registrar. Before sending it to the dissenting shareholder, you have to register it with the registrar. And in this notice, you have to have one statement that when this transfer is taking place, the consideration that should be paid to the dissenting shareholder, that is necessary cash is available for paying that consideration. Like that, one statement should be given by the purchasing company. So that provision is there in section number 238. Offer to the members of the transfer company, that is the dissenting shareholder, that will be given, and the information will be there in that additional information. That additional information will be given in Rule 28. Such information should be there in the offer notice. Then you should have a statement that necessary cash will be available for paying to the dissenting shareholder. Then it should be registered with the registrar. Then that one more provision is there. If the registrar is saying that I will not register this, then here the registrar should give the communication that I will not register this within 30 days of the application. Then if registrar is making such an order that I will not register this offer notice, then you can go for an appeal. If you are not registering such document, then 1 lakh rupees penalty will be there. So that is section number 238. Now we can see section number 232. In this, merger and amalgamation of companies will be covered. So it is a compromise or arrangement only, but in that there is a provision for the reconstruction of the company or companies involving a merger or amalgamation. In that compromise or arrangement contract, merger or amalgamation is also included. Then you have to follow section number 232 also. Then you are transferring the undertaking, whole or part of the undertaking. Undertaking means business. One company can do multiple businesses. In that one business you are taking, you are transferring a part of the business. For example, you are having multiple business. In that, these three businesses are controlled by a single company. One business you are transferring, either the entire business or a part of the business. So, if you are transferring this, then also this section 232 will be applicable. So that you are going to transfer it to one company or one or more company, that thing will be attracting section number 232. You have to follow this section also in that case. When you are having merger or amalgamation, or you are transferring the business and that is transferred to one company or two or more companies. Then the next thing, when you see here, you have to circulate some additional information. What is the additional information? Draft of the proposed terms of the scheme. The scheme, what is the terms and condition? Proposed terms. That draft you should be sending. When you are conducting the meeting, this also should be circulated as an additional document. You have to give a confirmation that you filed this with the registrar, and a report. In that report, what will be there? Effect of the contract. What is the effect of the contract on the member, debenture holder, creditor? Member means promoter member, non-promoter member, along with the KMP. And additional information of share exchange ratio, that also should be there. Valuation report if there is any. Then supplementary accounting statement, when you are conducting the meeting, the latest financial statement that you are having, if it is older by more than 6 months. For example, if it is 7 months old, or if it is 8 months old, or if it is 6 months and 30 days old, then in that case also what you have to do, you have to prepare a supplementary accounting statement for the transactions that is between the date of the latest financial statement and then the date of the meeting. Like that, the intervening transaction, you have to prepare a supplementary accounting statement. So these things should be the additional information circulated. Draft of the scheme, confirmation that it is filed with the registrar, report explaining the effect, and along with the share exchange ratio, valuation report, supplementary accounting statement. Then the tribunal will pass the order. Along with that, these things like some additional information will be there in the order. That also I told you, right? That additional information to be specified by the tribunal in the order that is given here. The transfer of the undertaking, from which date it will happen, what is the date from which the transfer will be effective, that date will be given by the order of the tribunal. Then allotment of shares, debenture, or whatever the instrument that will be allotted by the new company to the old company, that also will be specified properly. Then in this process, the issuing company, the new company, the purchasing company, it is issuing the shares, right? In this process, at any time, the shares of purchasing company should not be held in its own name. Then, whatever the legal proceedings going on against the old company, now it will be dropped and it will be continued in the same manner against the new company. Like it will be transferred from the old company, new company will take over the legal proceedings. Dissolution without winding up of the transferred company. So, dissolution without winding up. Now, what is the meaning of winding up? Winding up means you are appointing a liquidator, you are selling the asset, you are paying the liability, everything will be covered under winding up. Dissolution is the final striking off of the name of the company. In the registrar, they will strike off the name of the company from the register of companies. That final step is called as the dissolution. We will do the dissolution only after doing the winding up. Winding up, we will sell all the assets, everything we will do, and then the company will remain an empty shell. Like no assets will be there, no liabilities will be there, employees also they will be discharged, everything will happen in the winding up process. After that, we will do the dissolution. We will strike off the name from the register of companies. That is the process of dissolution. Winding up means doing all this. Dissolution means the final step of striking off the name of the company. Now here, winding up, we will sell the asset and we will make the company into an empty shell. But in this particular section number 232, already all the assets, liabilities, employees, the litigation, everything transferred. So the company is already an empty shell. So no need to do the winding up process. Directly we can do the dissolution. That is called as the dissolution without winding up. So this point will be repeated in many places in this chapter. So I hope you would have understood it clearly by now. Now here that is done. Provision for any persons who dissent from the compromise. That is the provision for the exit route of the dissenting shareholders. Then, if there is any capital held by the non-resident shareholder, then you have to keep into mind the FDI regulations, foreign direct investment. Non-resident means person resident outside India. If they are investing into India, they have to follow the foreign direct investment guidelines. That also you should follow properly. Employees will be transferred. Then, if the old company is a listed company, now, new company is an unlisted company. This will not automatically make the unlisted company become listed. You have to again list according to the ICDR regulations. So that you have to follow. Just because you are acquiring a old listed company, this does not mean that the new company will automatically become listed. That also they have given. So this you can read it by yourself. Then the authorized share capital fees, this is a normal point only, you can read it. Then other matter also can be specified by the tribunal. Here also one certificate to be given by the company's auditor that the accounting treatment has been done as per the accounting standard prescribed under section 133. Now, order of tribunal, it will be effective and it will transfer all the property, liabilities and any charge also. It will be transferred, or if there is any provision in the order for what we can say release of the charge, that also will be happening. Everything will be happening as per the order of the tribunal. You have to file the certified copy of the order with the registrar. We saw that already. Then effective date, from which date the scheme will be effective, that will be clearly given in the tribunal order. Then you have to this merger or amalgamation, it will not get completed in a single day. It is a long process. It may take up to 1 year or 2 years, by which the entire process is completed. So during that 1 year or 2 year after the tribunal order, the period when you are implementing the scheme step by step, you have to file the statement of compliance. Periodically, you have to file with the registrar that we are complying with the scheme. This till now, this is the status of the scheme implementation. Next, we are going to do this. Like that, you have to file a statement of compliance that you are properly following the scheme order given by the tribunal. If you are violating it, then what will happen? The penalty they have given. So that's all about section number 232. Now we can just make an overview of the section 232 from this flowchart kind of thing. So here if you see, you would have noticed that the notice of the meeting, the conduct of the meeting, the binding order, like that, some provisions it is not there. Binding order means the order is there, additional matters is there, the primary matter, that is not there. Then conduct of the meeting, how to conduct the meeting, the voting, that also not given in section number 232. Then notice of the meeting, to whom we have to send the notice, that null it is not there. These three provision, it will be automatically taken from section number 230. What is the notice provision? What is the meeting conduct provision? What is the binding order provision? Given in section number 230, it will be applicable to section 232 also. Additionally, that additional information that you have to circulate, the additional matters that should be specified by the tribunal, that also you have to follow. 230 subsection 3, 230 subsection 6. Between these sections, whatever the section you are having, that is 233, 4, 5 and then the 6. This and all you have to follow it as per section 230 itself, even in the process of 232 that they have given. This will be applicable even in 232 process also. That you have to take it from there. Then additional point, extra information that you have to circulate, that we saw. Order of the tribunal on a list of matter, detailed order will be there. Accounting treatment, that point. Then effect of order, appointed date, certificate of compliance, everything is there. Filing of order with the registrar. Then contravention penalty. Now we have entirely completed section number 232, which includes amalgamation in a compromise or arrangement contract. Now we can see section number 233. We saw section 230, which is for the compromise or arrangement. We saw section 232, which is for the amalgamation or transfer of undertaking is happening in the particular compromise contract. So these two we saw. Now we are seeing the fast track procedure, fast track mode of the merger or amalgamation, section 233. First I will show you this section from the flow chart. You will understand the overall section. Then we can go into the study material. Now this is the flow chart. Here what will happen? First they will prepare the scheme. Now before preparing the scheme also one thing will happen. They will create the draft scheme. Draft scheme will be created. They will send it to the registrar and then the official liquidator, whether they are having any objection, suggestion, that they will ask it. After that they will prepare the final scheme. That scheme they will get the approval from the members and then the creditors. Member with 90% total number of share, 90% total number of share. Creditor, majority creditor with 9/10 in value, majority creditor 9/10 in value. So member with 90% number of shares and majority creditor with 9/10 in value. And so you have to get the approval of both members and then the creditors. Both of them should give the approval, 90% and 9/10. Then after getting the approval, you will send the scheme to central government, registrar, official liquidator again. Earlier draft scheme also you sent it to registrar and official liquidator. Now again final scheme after getting the approval you are sending to registrar, official liquidator along with the central government. Now central government will see whether it is in the public interest or in the scheme in the interest of the creditor. They will see whether if the scheme is proper or not. Now here one more thing is there. Registrar and official liquidator, they can give if they are having any objection in this stage also. Now also they can tell if they are having any objection. The central government will see if the registrar or official liquidator they are not having any objection, and then the central government also thinks that the scheme is proper. Then they will register the scheme. They will issue the confirmation. After that you will file the scheme confirmation order with the registrar. You will file the scheme confirmation order with the registrar. Now, if the central government thinks that the scheme is not proper, then it will refer to the tribunal. It will refer to the NCLT. NCLT will see whether it is proper or not. NCLT will give an order. What order they will give? Whether the scheme is proper and they can continue under the fast track mode, or the tribunal thinks that it is proper only if they go under the normal mode. They can say that whether confirm and go along with the fast track mode, or else they can say another thing, go in the normal mode. That also they can say. This fast track mode is optional. If you want, you can do the fast track mode. If you are not able to get this much approval, then you can go to the normal mode also, where you have to get the approval of majority and 3/4 in value. Here 90% in value, 9/10 in value, that is required. But in the normal mode, less what we can say, less stricter requirement. It is a relaxed requirement. If you want to do fast track mode, you want to reduce the time taken for the process, then you have to get the approval of 9/10 in value and 90% shares. If the tribunal thinks that the scheme is proper, they can continue under the fast track mode. They will issue the confirmation. Then that confirmation order you have to file it with the registrar. If tribunal thinks that it is proper only if you go under normal mode, go and follow the normal mode. Then you have to do the application from scratch from the normal mode. They can pass an order that the companies should use the normal mode. Then you have to do from scratch using the normal mode. So first scheme approval, then scheme filing, central government whether it can give the approval or it will refer to the tribunal. Tribunal whether it can give the approval or it will refer to the companies to use the normal mode. So this is the entire section number 233. As I already said, this section is available only to certain companies. Now we can see in detail this section. Now we can see section 233 from the study material information given. I told you that only certain companies can do that. Two or more small companies can use this section. A holding company and a wholly owned subsidiary can use this section. Such other company as may be prescribed. Now they have prescribed the startup companies. So two startup companies can use this section, or one startup and one small company can use this section to do merger or amalgamation between them. Now the next thing, when you see here, the same thing they have given. Then we have to first send the proposed scheme to the registrar official liquidator. They will give the objection suggestion. After that, you have to get the approval of the members, that is holding at least 90% of shares. Then you have to file a declaration of solvency also, that you are having the assets more than liabilities, like that. The declaration of solvency, you are a solvent company, you are not insolvent. For that, you have to file the declaration of solvency. Then creditor approval, majority creditor with 9/10 in value. Then you have to file the scheme with central government registrar official liquidator. Then the central government can register it, or they can refer it to the tribunal. That thing they have given. Tribunal, they can give an order to go under the fast track scheme itself, or you have to go under normal mode. Then that order you have to file it with the registrar. Then you have to do the dissolution of the transferor company without winding up. Same thing, old company dissolved without winding up, dissolution without winding up of the old company. Property, liability, everything will be transferred. Charges will be enforceable on the new purchasing company. Then legal proceedings will be continued against the new company. Then if there is any dissenting shareholder, for that also the scheme, as per the scheme, they will do the implementation. So then done. After that, during this process, when issuing the shares, the new company should not hold any shares in its own name, that they have given. Then authorize the capital fees, that is normal provision. I already told that this section is optional and they can go onto the normal mode also if they want. That thing is there. So that entire thing they have given here, that is section number 233. We have completed the fast track merger or amalgamation. Now we can see the next section, which is section 236, purchase of minority shareholding. I already told that we are having one section for the purchase of minority shareholding. If you are becoming the holder of 90% of the total issued share capital, either by way of amalgamation or by way of acquisition, you are purchasing the shares slowly. That is called as the creeping acquisition. You are doing that and you are becoming the registered owner of 90% of the issued share capital. Then you have to acquire the minority shares also. That is an obligation. That is a mandatory requirement. You are having the obligation to acquire the minority shares also. So what you have to do when you become the registered owner of 90% of the issued share capital, either normally or through amalgamation, share exchange, etc., you have to notify the company of their intention to buy the remaining shares. You have to give a notice to the company that I want to acquire the remaining minority shares also. That you have to give a mandatory notice. Then you have to give an offer to the minority shareholders that I will buy your shares. The price at which I will buy your shares, it will be decided as per the rule 27. You have to determine the price and you have to give a notice to the minority shareholders. If the majority shareholders, they have to give the notice. And we are having one more provision. The minority shareholders, they can come forward. They can do the, what we can say, they can initiate this process by themselves also. The minority shareholders, they can give an offer. What offer? The majority shareholder should purchase the minority shares. Same thing only, but the offer can be initiated by the minority shareholder also. That also they have given. The price will be same as per the rule number 27. Then whatever the amount that is payable, the consideration, it should be deposited in a separate bank account. That bank account you have to operate for 1 year and then you have to pay the amount. You have to distribute the amount within 60 days. Distribution timeline 60 days. You have to operate the account for 1 year. Then if you are not able to disperse the money within 60 days you are not able to completely what we can say finish the distribution, then you can do the distribution up to 1 year also. So that thing they have given. This point they have asked in IBS exam also. This section they have asked in IBS exam, and particularly this point they have asked. Then when you see the company whose shares are being transferred, that is the company in which the minority shareholders are there. That company, it should act as the transfer agent. If the shareholders, the minority shareholders, they are not what we can say, they are not surrendering the share certificate, then what will happen? The share certificate will be considered to be cancelled. The company will issue the new shares to the company, to the acquirer. To the acquirer, they will issue the new shares. They will complete the transfer. They will make payment of the consideration to the minority shareholder using the deposit that they made earlier. Now, this is one point for the shareholder who ceased to exist or who died, and you are not having the information of the legal hire in the record that they have given. Then additional compensation. Now this is one important point. This also tested in IBS once. Now here if you see, you are having 1000 minority shareholder. Now in that, as per rule 27, you are getting the price to be 150 per share. Total 1000 minority shareholder are there. Out of this, 75%, that is 750 minority shareholder, they do a separate negotiation. They do a separate negotiation with the purchasing company or the acquirer. Now what they do a separate negotiation and they get a separate price, higher price of, earlier we decided 150 per shareholder. After the negotiation by these people, for these 750 minority shareholder alone, they are getting a price of 200 per share. Higher price negotiated by 75% of the minority shareholder, they are getting as a separate negotiation. This will be given only to the 750 minority shareholder, not to the remaining 250 minority shareholder. So when you do this is wrong, and the extra consideration whatever you are getting, that should be divided on a pro rata basis among the entire 1000 minority shareholding. So that they have given here. Shareholders holding 75% of the minority shareholding, if they negotiate separately and get a higher price without disclosing to others, then the majority shareholders, that is the 75% minority shareholding holders, those members, they should share the additional compensation on a pro rata basis with the other shareholders also. Then price will be determined by a registered valuer as per Rule 27. This also they have tested. This is an important point. Under this particular minority shareholding acquisition section, the price will be determined as per Rule 27. In that, registered valuer will determine the price. And then on failure of acquisition of shares, if you are not able to purchase the entire minority shareholding, 1000 minority shares are there. You are not purchasing the entire thing. You purchase only 900 minority shares. Then what will happen? That also they have given. So that's all. Here this case is that they have created the price. The price we have to decide as per the registered valuer as per Rule 27. Here in this case, they decided the price as per the mutually acceptable chartered accountant. The chartered accountant decided the price, not a registered valuer. Because of this, the thing under this section will be invalid and it will be set aside. That is this case law. Now we have completed this section number 236 also, purchase of minority shareholding. Now the remaining sections, when you see section number 237, central government can amalgamate the companies in public interest. So that is very simple section only, you can read it by yourself. So central government can do it in the public interest. The legal proceedings will be continued against the new company. Then earlier, for example, in the old company, old separate company, you are having some 10% shareholding. Now in the new amalgamated company, you are not getting that much shareholding. Your shareholding is reduced and your interest has been reduced. Then you will be getting some compensation. If you are having any problem with the compensation, you can go for an appeal. That single provision, that like you are having one provision for that particular matter. Then you have to send the copy of the order to the companies. Then you have to wait 2 months. The central government, they have to send the order copy to the proposed order to the in draft to the companies. Then they have to wait for 2 months. The company can give any suggestion, modification, and all. Then the central government will consider all that. After that, they will pass the final order. That also given. Then the copies of order will be laid in the parliament. They can do it, but they have to wait for 2 months. They have to give the notice of this kind of order we are going to pass. They have to give 2 months time. The company will give the objection suggestion. After that only they can pass the final order. So that is there. This 238 registration of the scheme that we saw. 239, 240 simple section only. Books should be preserved without getting the central government approval. You cannot destroy the books of accounts. 240 liability of the offenses prior to the merger or amalgamation. Before doing this merger amalgamation, whatever the offense you did relating to that one provision. Then 233 fast track mode of amalgamation we have completed. Then the cross border merger. This is also a simple thing only. You can read by yourself. Here this alone it is a what we can say a notable point. Here if the foreign company it is a holding company and the Indian company it is a wholly owned subsidiary, then they can follow section 233 for doing the fast track merger. They can merge or do amalgamation using the fast track section 233. They have to get the RBI approval. They have to follow 233. They have to give an application to the central government also, and in that Rule 25 they have to follow. Then declaration also they have to give. Some declaration they have given that will be given in sub Rule 4. So that also you have to follow when the foreign company is a holding company and the Indian company is a wholly owned subsidiary. So this is one notable point in the cross-border merger in this section. So that's all we have completed the entire compromise arrangement amalgamation chapter.